Welcome to the Centennial Edge. I'm Justin White, managing partner of Centennial Advisors. Today, I'm joined by Mike Alper, who has been a number one agent with Centennial numerous times over the course of his career. And we're going to talk about rent control in California today. Thought Mike would be a great guest. The length of his career really runs the rent control era in multifamily. Started out when 1482 was just a threat. Ultimately, we've seen that get passed. As a market expert in Santa Ana, he's helped countless owners navigate the Santa Ana city-specific rent control situation. And as a leader in all of Orange County, has now seen that spread to numerous cities that are considering it. So we thought Mike would be a great guest today to talk a little bit about what he's seen and, more importantly, what his clients have experienced. For a lot of the people we work with, they are career, longtime real estate owners that over 30 or 40 years have built up a significant amount of wealth. And overnight, or at night in some cases, a lot of that can be taken away without proper planning. So, Mike, thanks for joining us.
Thanks for having me.
Talk a little bit about it. So you've been doing this almost 10 years now. You've seen rent control and what that's done in the marketplace. Maybe give us just some overall comments and start specifically with just California's 1482 and how that's impacted the market.
Sure, Jay. So when I started, there was no 1482. It was owners could buy a building that was underperforming, go ahead and clear out the lowest paying tenants, renovate those units, and achieve market rent very quickly. So the math that people were doing, the payback period for doing certain projects was a lot shorter. And then AB 1482 came along and everyone kind of thought it was going to be the end of the world. Turned out to not be that bad. I think everyone's been okay. At the time, I think some people ended up selling because they didn't want to deal with the extra restrictions. And, you know, AB 1482's, I think, relatively mild, 5% plus CPI. This year, as of August 1st, you're allowed to raise rents by 8.7% in Orange County. So that's a pretty good amount to be able to get a building to market if you're, say, 20 or 30% below market rents.
Like you said, AB 1482, there's the 5% plus CPI. I think this is just an opinion question, but over the next 20 years of your career, based on the fact that 1482 has been pretty mild, do you think that they might cut that number a little bit?
I could definitely see them cutting the number. Maybe they go to 3% plus CPI, or just, try to get just CPI across. It's kind of a slippery slope, I think, when they pass these type of rent control ordinances. I think saving grace for a lot of folks, especially if their building is, say, operating 50% plus below market, is the fact that you can still get tenants out if you plan on doing a significant renovation. You have to pay a relocation fee and go through some certain steps, but you're still able to get folks out and get rents to market if you're way below.
What do you think that costs today to do a significant remodel on a standard unit plus the relocation fees? Like if somebody is going to try to get caught up, how much out-of-pocket expense are they really looking at, do you think?
I think it's, depending on the size of the unit, it's probably 20 to 30,000. If you want to do a really nice job inside, I've seen owners spend 40 or 50,000 when they're taking areas of the unit down to the studs and doing all that type of stuff. But I think, most people are using a kind of pro forma number of 25, 30,000.
Perfect. That's really interesting. You talked about slippery slope a second ago when you were talking about 1482. Certainly what's happened in Santa Ana was probably riding that slippery slope. Talk specifically about what you've seen in Santa Ana, kind of how Santa Ana's city-specific rent control is different than 1482. And then we'll get into some of your experience in working with owners who've had to navigate it.
Sure. So I saw the Santa Ana city-specific rent control come in for quite a while before it passed, actually. There were some tenants' rights activist groups who were really making it known that they were going to try to get a city ordinance passed and that they were going for something around 3%. That was kind of the word on the street. They were gathering signatures multiple times to try to get that rent control ordinance on the ballot for local residents to vote on. And what ended up happening is I was talking to tons of owners about how it might negatively impact values, what they could do to get their rents up to market, or other strategies they could use, such as moving equity into the red cities that were less likely to pass this type of ordinance. Most people didn't think it would pass. And what ended up happening is at a city council meeting in the middle of the night around, I think it was 2 a.m., they went ahead and voted to pass it without a vote from the residents. So it was pretty interesting. It kind of seemed like they just slipped it in there, when everyone was asleep. And we woke up the next morning and had some of the strictest rent control of any city in California.
So go back to one of the parts you said there, like it started, and was it one time or kind of one process, or did it start and it maybe didn't make it passed by the city council or didn't make it on a ballot, but it just kept coming back and then finally got approved?
That's exactly right. Usually what happens is you see these tenants' rights groups, they'll push for something to get passed multiple times. And usually that push gets stronger in the kind of subsequent times that they try to get it on the ballot. So what happened in Santa Ana didn't get on the ballot. Then it wasn't going to get on the ballot again. I think they were pretty close. So the city council decided to kind of just take it into their own hands and go ahead and pass it.
Okay. Next question kind of along those lines is, if I remember correctly, it passes in Santa Ana at the city council level. There's threats of all kinds of lawsuits. Landlords were going to band together. They were going to get it overturned. We've still got it in Santa Ana, right? Like, has any of that stuff been fruitful to overturn any of the provisions of the Santa Ana rent control ordinance?
No, there were some lawsuits filed. As far as I know, none of them have been successful. I'll say one thing about that, which is I've never seen a city pass a city-specific rent control ordinance and then roll it back. It usually passes and then it only gets stricter.
Great observation and great comment there. Let's talk a little bit about Santa Ana specifics or experience in Santa Ana.
Sure.
I've been doing this a long time. Santa Ana was a market that had a lot of longtime owners who'd built up equity over 20 or 30 years. How did that passing overnight impact their property?
It impacted it in a huge way. So the law allows for owners to raise rents by 3% or 80% of inflation, whichever is less. So, for instance, this year, owners have been able to raise rents by 2.43% in Santa Ana. It's a pretty big difference compared to the rest of Orange County. As of August 1st, owners in the rest of Orange County are allowed to raise rents by 8.7%. So when you model that out and kind of look at how it affects value, it's huge. It can be a 30 to 40% difference in cash flow and appreciation over a 10-year period. And so what we really noticed is we've been tracking cap rates, city versus city in Orange County for a really long time. We have a graph that we'll show here that's the last 10 or so years. And what you notice is in Santa Ana, cap rates after the city ordinance passed, they shot up to a little above 6%. So people are needing to offer around a 6% or a little bit higher than a 6% going in cap rate on average for buyers to close on a deal in Santa Ana, whereas other cities are down in that 4 to 5% range on average. So from a value standpoint, the same building in Santa Ana, let's say it's a 20-unit building in Santa Ana, let's say there's the exact same building in Garden Grove, one city over. Let's say the same unit mix, same exact rental income. The building in Santa Ana is going to be 25 to 30% less price-wise.
It's interesting where, I think a lot of owners feel like it's not going to affect me, or I'll just wait and see what happens. But overnight, it's taken so much of people's hard work that they did over 30 or 40 years straight out of their pocket, that they won't be able to give to their families, that they won't be able to enjoy their retirement as much. You have any deal examples of kind of what you talked about and how values changed overnight?
Yeah, for folks who purchased a property right before or kind of as the city ordinance was passing, I have a great example for you, actually. There was a 19-unit building at 510 South Flower Street. That one sold in December of 2021, so they were already in escrow.
Probably non-contingent.
When the ordinance passed. They closed that deal for $5.4 million in 2021, and it recently sold in July of 2025 for $3.7 million. Exact same building, rents were higher than they were when it closed in 2021. So that's just a kind of an indication of what can happen to value, when these things pass.
You think about that situation, over 30 or 40 years, started out with a duplex or a rental house or small building, got themselves up to the point where they could purchase an 80s construction 19-unit building. And when they go to sell it, basically all that equity that they built up over their lifetime, at least a significant portion of it, gone because of an ordinance like that passing. Let's talk a little bit more about that because, as we're having this conversation, there's been some other proposed ordinances or trying to get stuff on the ballot in other parts of Orange County. And some of the people on our team have been calling, trying to talk with owners about, hey, learn what's going to happen. If this happens, here's what the impacts could be. And there's not a lot of people that are super receptive to it because it hasn't happened yet. Now that this happened in 2021 in Santa Ana, if I remember correctly, talk about some of the conversations you've had with people over the last 5 years. Are there a lot of people that owned before that are like, I'm so happy it happened, it's made my business better? Are there people that are like, hey, I really wish I would have done something, but now I got to ride this out because I just lost $1 million? Like, what is the commentary and feedback from owners who did take a wait and see attitude in Santa Ana back in 2021?
I would say most people are not happy with the impacts. I mean, it's not just the limit that you can raise rents by. It's also the establishment of the rental registry where now every year you have to pay extra fees and kind of tell the city what you're charging for rent, who the tenant is, what type of unit it is. There's other, restrictions that are in place that just make it a little more work really for owners and also more costly. There's also the fact that you have to, if you're trying to get someone out, they're making that process harder and harder. So they're upping the amount of months that you have to pay relocation fees. And most of the time, you're going to have to pull permits for significant work that you're going to do to the property, attach them to the notice. There's all these, different things that they're making you do that makes it harder. I think most people who I talk to who own in Santa Ana, I mean, they wish that they would have moved their equity to a more landlord-friendly city that's less likely to enact this sort of rent control. A great example would be somewhere like Huntington Beach, arguably the most landlord-friendly city in all of Southern California, has it written in their city charter that they can never have a city-specific rent control ordinance. It would actually be illegal for them to do that. And so I think a lot of people, wish they could have moved their equity to a city like that. But the nice thing is it's not too late. There's still people buying Santa Ana. There's still people who believe in the city and that it's going to do well. And so there's still an opportunity for folks to, I think, get their equity into those better locations.
So you brought up a great point, and I'm going to try to remember to ask you, like, why somebody still buys in those areas today. But do you have an example of somebody who saw the writing on the wall, didn't want to wait and see what was going to happen and how it impacted them, and repositioned their equity into a place that might be a little more landlord friendly or might have eased their management burden before or kind of as the rent control passing was happening in Santa Ana?
Yeah. I was talking to a number of families about it and that they could most likely get a higher sale price if they acted, prior to rent control passing. One of the families, a great client of mine, had a property in historic French Park. They saw the risks of holding on to Santa Ana. They had an older building, deferred maintenance, rents were way below market, and they understood that rent control was coming. And so we helped them do an exchange into a 70s construction building in Anaheim. It was a few extra units. So I think they increased their unit count about 50%. They got bigger, newer units where the building was a little bit more efficiently managed. It was closer to market, and it was just a significantly better location. And I think we'll get to this part probably in a few minutes here. But as Anaheim started talking about a rent control ordinance, we ended up selling that building for a great profit. They made, I think, almost $1 million and helped them go into 2 more cities, kind of split the equity into 2 deals. Where we felt like it would be a lot safer.
Once you started telling that story, I rember some other specifics. Like, this was a family that had owned this building a long time. Like, they were attached, easily could have been one of the most attached people to their building and to Santa Ana, and still made the proactive decision. And, instead of losing $1 million, they made $1 million. Let's go to the next question. So, somebody's listening to all of this. They're like, all right, I want to do something because I don't want to miss the boat. But they're going to ask you, Mike, like, why does somebody buy a building today in a place like Santa Ana or where they have rent control?
Sure. Well, there's a bunch of reasons. One of the reasons is people who live close by in the city. Sometimes they like to have buildings that are right down the street from their house. Kind of the bigger reason is you can get a great going in cap rate in Santa Ana. If a lot of people believe that, hey, if I can buy a 6% cap rate deal based on current rents, there's going to be natural turnover. I'm going to be able to continue to get rents up over time. That's a pretty good return for well-located central Orange County. So there's people who are still interested in getting into Santa Ana. I think in some cases, the amount of upside in deals is also really big. So for instance, if you buy a 6% cap rate deal and there's upside, maybe up to that 8 or 9% range, then there's a path to getting to a positive leverage situation where your cash on cash return could be 10% a couple of years down the line if things work out. So I think that's kind of a big driving factor for folks.
I think the interesting thing about it is that, investment in real estate has been a great wealth building vehicle for private individuals, mom and pop owners for years. And that's not going to change because there's things like rent control, how somebody operates, how they manage their building, move away from maybe partnership with the tenants, but there's still opportunity. What I would say is for somebody who's 60 or 70 years old, who's been in it for 30 or 40 years, their opportunity that they got to experience is probably a little better than somebody that might be 30 or 40 just getting into it. But still, for those 30 or 40-year-olds getting into it, there's not a lot of better options to build wealth over time than good, well-located real estate, even if there are some rent control ordinance or you don't have total control of your own income stream. Like you said, there's still a lot of ways that income stream can grow.
Jay, you mentioned the type of operator. I think that's a really good point. There's certain groups that are really comfortable operating in a rent control environment. Maybe they came from doing deals in city of LA, and Santa Ana seems like it's maybe a little bit easier for them to navigate. So there are people who are willing to do the work and kind of deal with all the regulations, but it's just a different type of ownership. It's less of a passive ownership, and they really have to actively manage and be making the right decisions to not fall behind.
A moment ago, you talked a little bit about Anaheim and part of this multiple exchange process with a client and mentioned that we're starting to see other areas have their own exploration, let's call it, with city-specific rent control ordinances. Anaheim seems to be the leader right now in Orange County. Talk a little bit about what we're seeing in Anaheim right now and how that mirrors or differs from what we saw in Santa Ana?
Sure. So where rent control passes, it's usually in the biggest cities within any county. The two biggest cities in Orange County are Anaheim and Santa Ana. We look at we've been tracking the different cities on kind of a red cities, blue cities map, kind of how people are looking at red states and blue states during an election. And we noticed that, Anaheim's one of the biggest cities. It's super blue. There's a much higher percentage of renters than owners in Anaheim. And so we felt like it would be definitely the next city to make a push for a city ordinance. And they had tried to do it in the past. I think that was one of the big indicators, was the fact that there were these tenants' rights groups organizing. They tried to get it passed in Anaheim before. It didn't pass. And then usually what happens is a couple of years later, they come back and try to pass it. So this year, what we were seeing was this group was gathering signatures. They needed 18,000 signatures that were verified, real signatures, in order to get it on the ballot. And we just found out last Friday that they came up shy. So it is not going to pass this. It is not going to get on the ballot this November. So we don't have to worry about it passing in the short term. But if you look at kind of what they're saying and their meeting agendas, which we're reading, they are, I think, going to come back with a vengeance in 2028. It looks like they're organizing even a little bit more. So it's a pretty cool opportunity for folks in Anaheim right now, because they have a window. I think they have a window to be able to get all of their equity and redeploy it into a more landlord-friendly city, or maybe a different product type, or whatever it is that's right for the next 10 years.
I want to talk about that window, but real quick. So you said signature gathering didn't get it on the ballot. I also remember you talking about Santa Ana, that didn't really matter. And a lot of owners in Santa Ana thought they were going to have a window, and then that window closed pretty quickly. Do you feel like there's a longer, better window for Anaheim investors if they want to see what their options are and make a proactive plan to protect their equity? Or do you think it could be similar to Santa Ana?
I think it's really hard to say. I think if it were me kind of speculating based on everything that I've seen, I feel like it will probably pass in 2028. But there is a chance that the city council could pass it in the meantime. So it's hard to really know when that could happen. It was pretty out of the blue when it happened in Santa Ana. So, I mean, sometimes when something like that happens in the neighboring city, it can happen again.
Let's talk about that window. You said that you felt like investors had a window that they may have missed had it made it on the ballot.
Sure.
What does that window look like? What have you seen the people that have, protected themselves the best, both from a operation standpoint, they want to own in Anaheim forever, and from is my equity better off someplace else? First, let's talk about owners who are planning to own forever in Anaheim. What can they do operationally while the window is still open?
If I were an owner in Anaheim right now, I would be talking to brokers, property managers about what the absolute top of market rents would be for their specific unit type and location. So I would want to get a rent survey, maybe from, one of the brokers at Centennial or someone that you have a relationship with. And I would, talk to them about what needs to be done to the units in order to achieve that top of market rent. I think the worst thing an owner can do is to kind of bury their head in the sand and just pretend like this isn't coming. Leaving your rents 30, 40, 50% below market is gonna get you in a spot where the value of your property is going to be significantly lower a couple of years down the line. So I just think, working on getting those rents to market, if you're going to hold forever, you might as well do it now before it gets a lot harder.
I think the big part about gathering all that data and doing a little bit of research is that a lot of owners fear that if they raise their rents, their tenants are going to leave and go somewhere else. Well, if you know that after a raise, there's still 2, 3, 4% vacancy in the stock that you have. And you know that even after your increase, you're still going to be $150 or $200 below market. I think that gives owners a lot more comfort that they should do the increase, but it also gives them some comfort that they're not gouging these tenants that have been there forever. Like they're still going to be able to be in a place that might be a little bit lower than what they would have to do if they leave. So I think you really suggest a win-win strategy for an owner who both wants to be compassionate to their tenants, but also protective of the wealth that they've created. Now, Mike, let's talk about somebody who goes, I saw what happened in Santa Ana, that story about that property on Flower. I don't want to be that person that passively watches what I could leave to my family shrink. What should those people be doing in the window?
I think I would look at one of our 10-year comparative analysis models and see what options you have to make more with your equity over the next 10 years. We put together these models all the time for owners. And what we can do, what's really cool about it is we can model in, all right, here's how your property is going to operate over the next 10 years if you keep doing exactly what you're doing and just keep raising rents, versus if you exchanged into a bigger building, better location, different product type that was easier to manage, something like that, and just see what the options are. You know, if you can either make 30% more total return by going to a landlord-friendly city like Fullerton or Orange or Huntington Beach, or if you can replicate the income stream plus make an additional, let's say, 20% extra cash flow in a net lease deal, where there's no management or maintenance responsibilities, I think it's good to know what those options are.
You know, you said something really interesting, and doing this 26 years, I'd really encourage everybody to kind of take a look at it. Early on in our conversation, you talked about, you met with a lot of owners and you had modeled out, okay, Santa Ana at 2.43 or 3% rent increases versus a different city at 8.7%. I mean, you add that up over 10 years, or if somebody's going to own for the next 20, I mean, that's hundreds of thousands of dollars in cash flow, depending on the size of the building. It's probably millions of dollars or into the seven figures for sure on valuation if you're able to keep, increasing rents at the higher level versus what's happening in Santa Ana. And just taking a look at that and understanding what it could be. When you meet with us or somebody like it, it doesn't mean that the property's coming to market and that you have to sell it. What it really means is you're trying to get all the information you need to make the best decisions possible. Mike, you've had some great comments today, some good history on exactly what we've seen happen and advice you'd give to people. Any closing comments you'd like to make for an owner that owns in a place like Anaheim, maybe Garden Grove, maybe some other city in Southern California that's looking at a city-specific rent control that you've learned from doing this as long as you have?
Sure. Yeah, I think the biggest risk factor for multifamily owners in today's market is a city-specific rent control ordinance passing. So understanding what the probabilities are in the cities that you're either owning in or looking at making an acquisition in, I think is one of the most important things you can do. And that's where, brokers like us can really help you to dig in and understand kind of what the past history has been with that city. Have we, in most cases, we've been tracking kind of the progress of these sorts of things passing. And so we have an idea of where it's probably going next, what cities are maybe on the safer side of the spectrum. So I think just understanding that to protect your investment, meeting with one of the guys here, could be super valuable.
Thanks, Mike. If you're a long-term owner and you always enjoyed the ability to control your income stream and invest in commercial real estate and the things that you're starting to see, whether it's a statewide, city-specific, just cause eviction, or maybe even changes to property taxes on the horizon, and you want to know your options, we're happy to share with you what we know. And help you come up with a solution that best fits your goals. Thanks a lot for joining us on the Centennial Edge. Mike, thanks. It's been a great time talking with you about what you've seen And we wish you all a great day. Thank you.
Thanks.